Last week, a shoe company rebranded as an AI company, and their stock went up 600% overnight. But it's not the first time this has worked. Allbirds used to be the poster child for eco-friendly sneakers. It went public in 2021, lost momentum, and after a few missteps, its stock sank from double digits to just a couple of bucks. After that fall from grace, Allbirds sold off its core shoe brand and related assets for about $39 million. Then, in a pivot no one really expected, rebranded to New Bird AI, with a plan to buy GPUs and rent out AI compute instead of selling shoes. If we look here at Allbirds stock since IPO, we can see it's been on a pretty relentless decline and never really recovered. But on the day that AI pivot hit the news, the stock went crazy. Shares jumped by several 100% within one day, and the closing price leapt from about $2.49 the day before to roughly $16.99. Peaking at one point at just over $23. In market cap terms, which is the stock price times the number of shares, the whole company went from being worth roughly $20 to $25 million to well over $100 million. What you're watching here is narrative arbitrage, a struggling brand stepping out of a dying storyline and hijacking the market's favorite buzzword so it can be valued as a promise again instead of a problem. So when Allbirds tried to migrate from fallen shoe company into AI-adjacent growth story, investors rushed to get in on the hype first and left the details to worry about later. We've seen versions of this before with moments like the dot-com boom or blockchain, and we actually have data on it. A classic study called arose.com by any other name looked at 95 companies that simply added .com to their name during the late 1990s internet boom. It split them into several groups, from firms whose core business had nothing to do with the internet to pure internet players, and found that, on average, those companies saw abnormal gains of roughly 74% over the 10 days around their name change, even if their actual businesses weren't especially internet-heavy. Now AI has become the latest version of that, but whether the Allbirds story turns into a durable business is a separate question. So where does Allbirds land on that spectrum? On paper, the company has lined up a $50 million convertible financing facility to fund its pivot, but in the grander AI infrastructure world, where the estimated capital expenditure this year is over $450 billion, and big players already spend billions each year on chips and data centers, $50 million is just a drop in the bucket. Looking further at the drop in Allbirds stock just the next day, you can already see how fragile story-driven moves are. And for a brand built on eco-friendly shoes to pivot into one of the most energy-hungry parts of tech, well, that's one way to rethink your carbon footprint.